I'm joined today by Brendan Lee Young. So, Brendan, welcome to the show.
Hey, Tony, thanks so much for having me. It's a pleasure to be on.
It's a pleasure to have you. Brendan is a co-founder of a fintech company called Passiv, which is a portfolio management tool that's designed to help self-directed investors to manage and grow their own wealth. Brendan, correct me if I'm wrong, but I understand that Passiv currently manages is it over 20,000 accounts and is on track to hit $1 billion in assets this year.
Yeah, we've passed a billion a couple of months ago. So
Yeah.
yeah, we're helping a lot of self-directed investors manage their accounts, and it's been fantastic. Really, just seeing the amount of trust our users placing us, and that's evident in the amount of assets they trust us with, or to
That's
help them manage.
amazing.
Yeah.
So Brendan, without sort of delaying things further, I'm sure my listeners is going to be fascinated to hear your story and why you started Passive in the first place, and how you help do-it-yourself investors using your platform to get amazing results from their investments.
Yeah, for sure. So, as you can tell, I have a bit of an accent. I'm from a small Caribbean island called Trinidad and Tobago, and I moved to Canada in 2008. And so, myself and a couple of friends, we moved there to complete our undergraduate's degree. And at the time, I told my girlfriend and some other family members, I was like, "Hey, don't worry, I'm just going to be gone for a year." Fast forward a year, and I'm having the same conversation, telling them how much I'm going to stay, because I just honestly I saw a lot of opportunities here in Canada, and I've always had this desire to be like my own boss, be an
Yeah,
entrepreneur. And quite frankly, the opportunities in Trinidad and Tobago aren't as much as Canada. And so that's sort of why I decided to stay. And for some people, they may think it's an easy decision, but it's really tough being an immigrant and leaving your
yeah,
family and friends behind to chase a
yeah.
dream that you might not accomplish, right? So yeah, it was wild. But anyway, yeah, after graduation, I got a job in tech that allowed me to get my residency in Canada.
Yeah.
And so upon getting my residency, I went back to school to do an MBA, because I wanted to really focus in entrepreneurship. And so I learned about entrepreneurship. And well, at least I thought I learned about entrepreneurship, because whatever you learn in school does not necessarily align with reality. Um,
Yeah. I learned that a long time ago, but I think a lot of entrepreneurs will tell you the same, but you don't know that at the time.
Yeah, yeah. So anyway, while I was doing my MBA, I took this course just out of random interest, called value investing. And quite honestly, that course probably gave me the entire amount of value I got out of my MBA program, because
Yeah.
like I thought I was going into this course learning how to pick stocks, beat the markets, and what I learned was it's just really hard. And the average investor who doesn't have much time to spend, um, like looking at fundamentals and searching screeners to find stocks,
Yeah.
is that you can buy an index fund and hold it for the rest of your life, and you probably beat most active fund managers. And so that was the one data point that sort of stood out for me when I took this course. And so anyway, I left the course almost convinced that I could not beat the markets consistently and be like Warren Buffett. So anyway, that sort of got me interested more into passive investing, obtaining financial independence. And so I graduated from my MBA, worked in tech again, but this time I was trying to chase the financial independence dream. And basically, even though I was invested in a handful of ETFs, it was a bit, it was, I'm not going to lie to you. It was cumbersome because I had to use spreadsheets
Yeah.
to
Yeah.
help me like balance my portfolio, track my
Yeah.
returns. And so I would be like on a Friday afternoon, just about lunchtime, hiding from my boss while I'm trying to figure out my Excel spreadsheet to place trades at my broker. And so anyway, I just sort of like said, geez, man, this is too much. And so I gave up for a bit. I just bought what I could buy, and I just said, you know what, I'll just let it ride. And um, yeah, fast forward like maybe 2 years, and I met my co-founder at a friend's party, and he was telling me about how he had the same problem of basically managing his investments at his online broker. And so he built this really cool Python script that helped him to manage his money
Okay.
at his broker, because they had something called an open API.
Yeah,
And
I
so
know. Yeah.
so basically that allowed him to build this script and manage his money. And he was telling me about it. I was like, dude, I have this exact same problem. Can I borrow your script? Well, even though I worked in tech, I'm not a coder.
Yeah.
So I just saw like lines of code, and I was like, oh my gosh, what does this mean? How do I use it? And so he basically built this nice web interface that I could use, and some of his friends and family members can use it as well. And that sort of conversation and problem is what sort of was the genesis for us to look at Passive as a real business to help people that had the same problems that we did manage their wealth at online brokers. So yeah, that's sort of like the entire
That
story
started,
from
yeah.
yeah.
I think it's a common problem because it's not just about knowing the market and what to buy, etc. Which is, for most people, it's an almost impossible knowledge gap to fill because you need to know what you're doing. So trackers, again, they're becoming a lot more popular in the UK as well. I have been for a number of years. Model portfolios is something that's becoming stronger and stronger here as well. But managing it is a different animal altogether. You can spend so much time tracking investments, rebalancing, all the things you need to do, which most people, like something you did, will give up after a short space of time because it's too much like hard work.
Yeah, and it's funny. There are a lot of similarities here in Canada to the UK, especially in terms of model portfolios.
Yeah,
That's actually how we got started.
yeah.
We were following this blog that had this really cool tree fund ETF portfolio that we could implement. But that's sort of how they get you, right? When I say they, I mean like
Institutions.
institutions. They'd put these model portfolios out knowing that the average person doesn't want to spend time in Excel
Yeah.
trying to replicate it. But anyway, I guess my business partner, he was like such a good coder and an engineer. He just said, you know what, I'm just gonna do this script and build this thing. And who would have thought it sort of would evolve to where we're at today?
So how is it actually evolved to this stage? Because I've
Oh,
had a look at obviously your demo platform. I must admit it looks like a really useful tool. So you've obviously started off something which is quite basic, but you've obviously noted a gap in the market, which is obviously the fundamental characteristic you need as an entrepreneur, which you've done that. So how has it gone from the early days where you had that original script from your co-founder, Brendan, his name is as well, if I remember.
yeah, yes.
So how have you gone from that to where you are now?
Okay, so all right, I'll pick up from where I left my story off. So he built this web app, and we were like, well, maybe there are other people besides us and our friends and
Yeah.
family who could benefit from this. So we went to an online forum, and we posted seeing if there'd be any interest, and lo and behold, there were tons of people that sort of self-identified saying, hey, I have this problem, I want to try it. And basically, as people started using the product, they'd give us feedback on it. And so we just kept iterating on the
Yeah.
feedback, improving things. And it's really just listening to your users and understanding the why behind their requesting a feature. Because oftentimes someone would say, I want X, but you need to understand why they want this X. And that's only possible through like really close knit user feedback. So we
Yeah.
didn't try to optimize to make money. In fact, for the first year, we didn't make any money, and that was never the point. It was just really to get feedback and see if we could move from this really niche rebalancing
Yeah.
tool to something more broad. And it just evolved based on user feedback. And really it was this initial online community that helped us develop it, and it got so, I don't know, good or popular that users started telling their friends, and so then you started having this sort of like growth coefficient where as one person comes in, they tell
It's your
someone
adage,
else.
isn't it? It goes slowly, slowly trickles, and then whoosh.
Yeah, and so anyway, that's sort of what happened, and the broker that Passive was integrated with, they started to see that their clients were using Passive on their
Yeah,
end because it's a secure
yeah,
connection
yeah.
that we make with the broker, and so they approached us and they're like, well, do you want to partner with us? And we were like, sure, because as a young startup bootstrap SaaS company, you're going to spend a lot of money on marketing to
Correct.
get these early users. And
Yeah.
so, fortunately enough, the brokers that we invested our money in, they sort of saw the need, and they
Well,
like,
they certainly saw the potential
yeah,
to want
yeah,
to even partner with you. So
yeah. And kudos to them because at the time, like our website tool was really rudimentary. So it's evolved as a function of user feedback and getting that sign of trust from the brokerage partners that we have today. They sort of push us to, improve the product and, you know, be where we're at, really.
okay, so I think for some of the listeners who may not be familiar with these types of tools, but my understanding is that first of all, you need to obviously open up a broker's account, which is one of the main factors, and you need the API code from them. Do you want to explain, first of all, for the listeners, what an API code is?
Yeah, so an API is an application programming interface, and it's just basically it's something that a financial institution or any product really would present to other developers and say, hey, you can use my platform securely through this framework. And that's sort of what the API means. It just allows two
It's a
software.
connection, isn't it? It's a connection,
Exactly, it's
isn't
a
it?
connected. It
Yeah,
facilitates a connection
yeah,
between two platforms. And so, how Passive works is that you must have a broker. Sorry, you must have an account at the brokerages that we are integrated
yeah,
with, and that's just because we prioritize working with brokers that have open APIs because
yeah.
it's very safe for our users,
Okay.
and they don't have to worry about giving us their username and passwords. It's all done through the API.
That's going to be obviously a major concern for most people is the security of their data as well as their investments on that platform.
Yeah, and that's the beauty of it. By integrating with the broker, we actually don't hold our users' money.
Yeah,
They
yeah.
have full control over their money
It's
at their
just a
broker,
mirror image of really what they've got, isn't it?
eh, basically.
Yeah,
And so, all right, so you have an account at the brokers we integrate with,
yeah,
then you sign up to Passive,
yeah,
and once you sign up to Passive, you're then prompted with two options. You
yeah,
could import your current portfolio and
yeah,
set that as your target allocation,
yeah.
or you can build your own target allocation from scratch. And once you do either of those two things, Passive looks at the available cash that you have in
Yeah.
relation to your target portfolio
Okay.
and will tell you the trades that you need to place to keep your portfolio balanced. And so we designed it in a way where it's what we call buy only in terms of buying the underweight assets
Okay.
only. And so we found that's helpful because it minimizes the amount of trades that you place.
Yeah.
And sometimes users don't necessarily want to sell overweight assets. But
Yeah.
if they want, they can flip a switch and Passive's algorithm can factor in buying, well, selling and then
Selling.
buying
Yeah.
of assets. And so anyway, my point is that once you figure out what your target allocation should be, Passive's algorithm is flexible enough to help you either buy underweight assets, but sell and buy assets, or even do dollar cost averaging into your holdings. And so once you set up your portfolio, Passive like basically takes that sort of work out of the equation for you, and all you as a user have to do is look at the calculated trades, and if you think it makes sense, you can then log into your broker and place them.
Yeah.
Or if you are a Passive Elite user, which is the paid version of our product, you could click a button and have all of those trades placed
For you
for you, and
because
and
of the
saves money.
interfacing connection. Okay.
Yeah, and so and on a bare bones level, that's how passive works. Of course, if your portfolio drifts, we'll send you an email to let you know, hey, your
How
portfolio is
where
drifting.
how long? I mean, what's the parameters there? Is it if it changes by 5%, 10%, or is it sort of you get an email or a notification once a day, or what is the work?
Yeah, so the beauty of it is it's set by the user. By default,
Okay.
we've set up a 10% drift across your portfolio. So if it just combined by 10%, you get that email. Of course, some users opt to adjust their settings to have 5 or 2%. But that's the beauty about passive. It's so flexible that it really empowers our users to be their own wealth manager and invest passively in their style, because even though there's passive investing, what we've learned is that passive investing means different things to people, and that's that's
Passive investing is where you outlined at the beginning, is where you are investing in trackers, ETFs, etc., not picking individual stocks.
that's correct. But you could also be considered passive, at least according to some of our users, which we listen to a lot, who we listen to a lot, is that you could, let's say, buy a stock that you believe is undervalued and hold it for a very long time. And by that
Yeah,
definition, are you a passive investor? And so what we've seen is that people start with
yeah,
trackers, and it is debatable.
yeah, yeah,
I
yeah, yeah,
get
yeah.
that. But people start with trackers, and then they get into one-off stock picks. And so we in the early days, we get emails from users saying, "Hey, I have this tracker portfolio that I'm managing, but I hold Apple stock and I don't want it to be part of my balanced portfolio, but your algorithm keeps telling me to sell it. What could I do?"
Yeah.
And so we had to build this setting called exclude stock picks so that
Okay. Yeah.
people
Okay.
that
Yeah.
are basically following trackers, but also doing a few speculative stock picking on the side, or maybe long-term buy and hold strategies, so that they could almost still get that balancing functionality, but excluding the stocks that they're just buying and holding, and they don't want to look at for the next 10, 20 years. And so,
I tell you what
yeah,
I love about this is about a journey for a lot of investors where, as you said, they may start off with some basic portfolios made up of trackers. As they build in confidence and knowledge, they then will branch out and buy individual stocks, and you learn and you learn and you learn. So people can become quite adept of investing for themselves by a series of learning how these work. But it's a great place to start.
yeah. And internally, we have this sort of debate, because it's like, where do you draw the
Yeah,
line
exactly.
with your platform? And so my co-founder, he's a hardcore indexer.
Yeah.
I would consider myself a core and explore type person. So
Okay.
I would have 90% of my assets in solid
Yeah,
index
yeah, yeah,
trackers, and but I like to use my value investing skills
yeah.
at times. And so we've had debates internally in terms of, where do we draw the line? Do we allow users to have options to hedge their portfolios? Do we have another module that lets people do more active investing? And so from our point of view, we think the line should be drawn where users aren't necessarily doing day trading, because there are other platforms out there that
Yeah,
let you
yeah,
do
yeah.
day
No, no.
trading, and that's
Yeah,
not the
yeah.
reason
No.
behind why we started Passive. And so I think serving the core and explore and index investing folks is probably where we're gonna stay.
All right, but you've got the ability to have more than one portfolio on your tool, on your platform. So in theory, people can have, a standardized tracker type portfolio, but they can have another portfolio which is slightly different from that, and may incorporate some of the individual stocks, etc. So
Yeah, that feature was also built from our users' feedback as well, because what we heard was that users were like, "Hey, I have one account and I want to have two portfolios for that one account." And for my co-founder, he couldn't understand why someone would want to do that, because he's a hardcore indexer. But for me, I thought it made sense, because again, you might either want to have a separate speculative portfolio in one account and not necessarily
Different risk
open up.
profile, a totally different risk profile.
Yeah. So yeah.
Different length of time, so different time scales, which means obviously the longer, in theory, you can have a longer or a different appetite for risk. Shorter time scales can be obviously a little bit more conservative. But the other thing I picked up before we come on air is that I can see this being used for comparing a professionally managed portfolio with one that you do yourself.
Yeah, so I'll tell you the story about a friend of mine. So he was with a popular robo advisor here in Canada, and so he actually took their ETF model portfolio and replicated it in Passive, and so he was trying to compare between theirs and his, and he was like, oh man, this is so great. I'm outperforming the robo advisor. Why is that? I was like, well, it's because of the fees, dude. You're not paying. I think in Canada you pay about like maybe 50 basis points for just rebalancing. And so he can understand that he was slightly overperforming the robo advisor because he was saving on that rebalancing fee, which, by the way, I think it's wild that someone would pay a robot a percentage of their net worth over time just for rebalancing. I think that's kind of wild, at least for me, and maybe that's just because of my level of investing. But I could see it making sense for someone that's not as sophisticated, or different strokes for different folks is my point. But yeah, so he did this thing and he realized that eventually he was only outperforming his role because he was saving on that fee. And personally, when I started investing, my employer would do matching contributions to a mutual a mutual fund. Exactly. And in Canada, mutual funds on average are like 2%. And so just by following a model ETF tracker portfolio, I was just saving on that 2%. And eventually I just, when I left my job, I just moved everything out, but and so I could totally see why people would compare, because I was always comparing my returns from my employer sponsored mutual fund to my DIY tracker portfolio, and I always outperformed. Of course, again, it's because of the fees and maybe the asset allocation was a bit different, but which I think is also important to point out is that if you're comparing, you probably want to compare apples to apples in terms of the asset allocation.
You've mentioned asset allocation a few times. So again, for the listeners, can you explain the importance of asset allocation? You've also mentioned once you've established your target asset allocation, how do people, first of all, what is asset allocation? What does that mean? How do you define or decide on what your target asset allocation is?
Yeah, so basically, I see asset allocation as not putting all of your eggs in one basket. It's essentially a risk mitigation tool. So instead of putting all of your retirement savings into one stock like Tesla or GameStop, you take your money and you spread it out across a variety of assets. Of course, those assets are not just like stocks, they can also be bonds. And so therefore the concept comes in, well, for my stocks bucket, I'll put $5,000 into stocks, and for my bonds bucket, I'll put $5,000 into bonds. And so then your asset allocation would be that mixture of your money between stocks and bonds. And hopefully within your stocks bucket, there aren't like just one stock, but multiple stocks, because even within that stock bucket, you want to be diversified as well. And so I equate asset allocation to diversification.
Yeah, and it's a way of having a much more robust portfolio, which is less volatile. So it does help with de-risking the portfolio as well.
Yeah, and to answer your point about how do you come up with your asset allocation, so I'm gonna pause here because when I say pause, I think about how I came up with mine. And so I followed a model portfolio and I thought to myself, well, I like taking risks. I don't mind if the market drops by 50% because I've trained my mind to see that as a buying opportunity. So I would consider myself to be high risk. So that was very, very, very subjective. And at the time, I had never ever seen a market
Yeah,
crash. So
yeah.
as Mike Tyson said, it's one thing to have a plan, but when you get hit, how
You
does
go
your
out the window.
plan? Yeah. So initially, when I went through the construction of my portfolio, I was very subjective because I found a model portfolio, said I don't want to hold any bonds, so I must be aggressive.
Yeah.
But 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 then a friend of mine said, "Oh, really? Are you sure you're aggressive? How would you act in these scenarios?" And so I was like, maybe I need to look for something else. And so I stumbled across a risk assessment questionnaire.
Right. Well,
So I said,
I led you into that nicely, I think so.
yeah. So Vanguard has a very good risk assessment questionnaire that they do,
They
and so
do, yeah. Yeah.
I took that. That told me, well, Brendan, actually, you're not as aggressive as you thought you are. Maybe so. I went from 100% equities portfolio down to I think it was like 80/20, and they asked me a series of questions, and so that's sort of what I would recommend to anyone is that you look for some sort of basically risk assessment questionnaire if you can't properly assess your own risk. Of course, some people argue, well, how could a questionnaire tell you what your actual risk tolerance is? I've heard counter arguments there, but from my experience, if anything, they've been more conservative, which
I think
isn't a bad thing.
I think they designed for that. Like there's multitude of risk tools out there. I think it's a question of you need to start somewhere. You can't just do finger in the air and I want that level of risk because you understand what that means. And it's not about risk; it's also about capacity for loss because some people can't afford to lose money or any big drop in terms of the investments that they do. So I think this is where for me it's a big issue where people who do invest in, especially for those that do invest in themselves, do it yourself, then is to understand the level of risk that is right for them, and that dictates then the asset allocation that they should be taking.
I completely agree, and that's why I'm a big fan of. In Canada, we've got this group of financial advisors that are fee for service. They operate just like an accountant or a
Yeah,
mechanic would. You meet with them, they help you
yeah,
determine your asset allocation, and then
yeah.
they help you create a plan, and you go off and you implement your plan by yourself. In absence of that, I would use an online risk assessment questionnaire just because it's better than being subjective.
And is there any that you use which is linked to your tool, or is it something that people have to go off and find for themselves?
Yeah, you'd have to. So because passive is really designed for self-directed investors, you'd have to either speak to someone
Yeah. Okay.
or find an independent tool. I personally use the Vanguard
Yeah.
risk assessment tool,
Yeah.
and I trust Vanguard because they make great
Well,
ideas. So.
obviously they are the leaders in the world in terms of what they're doing. So it's not perfect by any shape or form, and having obviously used. I use all types of investments, as you know, and all different types of risk profile questions. So, like everything else, it's a good starting point. And if you are starting out and haven't got anything else, then it's as good a place as any to start.
For sure, yeah, I completely agree.
Okay, so in terms of stage of your development for passive, so what is next? What's on the horizon for passive? What's your sort of plans for the future?
Yeah, so I would like for us to, well, firstly, where we've got segments of users who are developers and they're big believers in cryptocurrencies,
Okay.
and I speculate a bit in it, but some there's like from what I've seen, there's some segments of users that believe this is a new asset class and it's going to be there in their portfolio, a co-holding in their portfolio for a long term. So we've started to integrate with some cryptocurrency exchanges, and that's just to serve users who are a bit more advanced in that segment.
Yeah.
Aside from that, we're looking at improving our onboarding experience. So we started with a very simple product, and now it's gotten a bit more robust. And so I think making sure that users get the right experience for their level of comfort is important, because I would hate to feel like if you're just signing up to use Passive to just manage a tracker ETF portfolio, you might not necessarily want to be presented with all of our features that help you invest in a tax efficient way. So understanding and improving that user onboarding experience, I think, is critical. And the third thing that's on our radar is helping users discover model ETF portfolios. And so those three things I would say are what's on our short-term plan.
Okay. Is this platform suitable for anybody across the globe, or is this just specific for Canada and the US, for example?
Our goal is to be global, and so I should have mentioned that. I thought it was a bit implied, but we're trying to be we're a software company. We'll never try to be a financial institution, and so we see Passive as operating on top of many brokerages across the world. And today we're integrated with Interactive Brokers. They're global brokers. So if you want to use Passive and you're in the UK, all you have to do is have an account with Interactive Brokers and you can use us.
Yeah, I was looking at the brokers that you've got, so I actually didn't recognize any of them. So
and that's something else that we're trying to improve, is that really, how do you get access to brokers that have no open APIs? And that's something we're working on. And so we hope that by us partnering with the ones that do have these open APIs, some feel a bit left out to the party, and they try to have conversations to let us integrate.
Right. Well, obviously at different stages anyway as you develop and grow. So again, same with the platform. Also, is very much designed for North America. So is that going to be sort of a European or a British slant on there as well, with like the euros or pound sterling on there?
Oh yeah, like we support a ton of currencies. The limitation is just really the brokerage integrations, and so that's why, like, Interactive Brokers, a UK citizen could open a IBKR account if they wanted to, but what I think we could do to help though is by partnering with third-party aggregators to help users who are in the UK still get the calculated trades, but then they just have to go off to their brokerage platform and place them. And so that's something we've started doing now. So I would say if you're in the UK and you don't have an account with Interactive Brokers, nor do you want to get one, then give us about a year, and within a year we would have a lot of coverage across many brokerages, because we'll work with third-party aggregation services. And just be forewarned, the best experience is always with a broker that we have a direct integration with, but you could still get the benefit out of Passive if you have a broker we don't support when we get these aggregation capabilities.
All right. And on Passive, again, if I understand it correctly, you've got a free version and you've got a paid version. So what you get with the paid that you don't get with the free version?
Yeah, so the free version just gives you the calculated trades. With the paid version, you get the ability to place one-click trades. So at the click of a button, boom, all of your trades are allocated. You get features that allow you to have more control over your currencies and how they're treated. Some users don't want to incur forex conversion fees at their brokers, so they can flip a switch and have more say over how their currencies are treated. Aside from that, you can group and prioritize assets into classes and rebalance and allocate cash in accordance with those classes. And that's pretty much it, just those three features for now.
All right, well, it's still worthwhile. So coming towards the end of our conversation today, which I've enjoyed very much, but there's a question I always ask all of my guests, and I'll ask you the same. And that question is, what does wealth mean to you, Brendan?
To be honest with you, I would say wealth means freedom. And by freedom, I mean being able to enjoy life on my own terms. And also, not that I don't want to work, I would like to also work in my own terms. So, when you think about some people who take jobs, they may take the job that pays them the most
Yeah,
money, and
yeah.
they're not necessarily happy. And I think having that sort having wealth allows you to pick and choose the projects and jobs you take up.
Yeah, I think it's very much about choices. That's for sure. So I mean different things to different people. So your answer was perfect. So
Okay.
now if people wanted to use Passive, then how do they get in touch with you to open up an account, use a demo, or whatever they may want to use Passive for? So
Yeah, so if anyone wants to sign up to Passive, all you have to do is visit passiv.com. So that's passive.com.
yeah.
And if you visit passive.com/, Tony Talks, what we've done is we've set up a special coupon that's going to give anyone that signs up 50% off of Passive Elite for 2 years. And so I would encourage anyone that has an account with Interactive Brokers, if you're listening and you want to take advantage of this special offer, just go to passive.com/, Tony Talks, and you'll be able to get that special offer.
That's very generous of you. And
No
I'll put all
problem.
these links up on the show notes. So if people want to find those links, all they have to do is go on to the one of the shows and pick up those links.
For sure. And please, if you do try us, send us an email, give us some feedback. We're always trying to improve. Tony, you rightfully pointed out that we need to like maybe expand our coverage a bit more to the European market. And
Yeah.
so we're always open to feedback from users in the UK as to how we can do that. We thought it's best with Interactive Brokers, but that's just the first step, really. So we welcome any feedback from your listeners.
Europe is a big market, so I'm sure you can have if you obviously fulfill their requirements, you can have another market which is perfect for you guys as well. So Brendan, it's been a pleasure to speak to you. I've really enjoyed our conversation today. I think your tool is actually fantastic, and it's going to help a lot of investors. So good luck with that, and wish you all the best in everything that you do.
Thank you so much. Bye, everyone.